Have you ever refreshed a chart every 30 seconds while in a position that wasn't even doing much? Or sat at your desk for hours waiting for a setup, refusing to step away, even though you were tired and hungry? Or opened a trade on a slow day just to have something to watch? That's not analysis. That's not patience. That's something else. Welcome back. This is episode 9 of our trading psychology series. Today, we're going to talk about a pattern most traders won't admit to, because it doesn't feel like a trading problem. It feels like dedication, like passion, like being serious about the craft, but underneath, it's something different. We're talking about trading addiction. Quick explanation. For anyone hearing this term for the first time, trading addiction is the pattern where the ACT of trading becomes the reward, not the outcome. A regular trader takes trades because they expect to make money. An addicted trader takes trades because they need the feeling, the feeling of being in a position, the feeling of watching candles develop, the feeling of being plugged in. The money is just an excuse to keep playing. This sounds harsh. It is. But the pattern is real, and it affects more traders than most people realize. You don't need to be losing money to be addicted. Some addicted traders are profitable. The question isn't whether you're winning. The question is, what would you do if trading didn't exist tomorrow? If the answer is, I'd be relieved, or I'd be lost, you're closer to addiction than you think. Let's start with the neuroscience. Because addiction in trading is not a personality flaw, it's a hijacked reward system. When you take a trade, you don't know the outcome. That uncertainty is critical. Your brain releases dopamine in response to UNCRTAN rewards, not certain ones. A guaranteed win produces less dopamine than a possible win. This is exactly how slot machines work. You don't get a dopamine spike from putting $1 into a machine that returns 90 cents. You get one from putting $1 into a machine that might return $100 or might return nothing. The variability is the addiction mechanism. Trading has the same variability built in. Every trade is uncertain. Every trade produces a dopamine surge at entry, during the wait at exit. Even losing trades produce dopamine because the brain was anticipating the possible win. This means trading is designed by structure to be addictive, not because trading is bad, because variable rewards are how brains form compulsive loops. Once you understand this, the urge to refresh the chart every 30 seconds makes biological sense. You're not being dramatic. Your brain is doing what brains do, but you can override it. You just have to see it first. There's a second mechanism worth knowing: tolerance. In every addiction pattern, the same stimulus produces less response over time. A trader who started with a 1% risk per trade and got a thrill from it needs higher stakes to feel the same thrill 6 months later. So they size up, or use more leverage, or take more setups per day. The thrill they're chasing isn't really about the trade. It's about the size of the dopamine release. Bigger position take a bigger spike. This is the same escalation curve as gambling or drug addiction, and it produces the same outcome: bigger losses, faster. The pro trader notices when their size starts creeping up just because they reset it back down. The addicted trader assumes the size creep is natural growth. It's not. It's tolerance. There's an identity layer that makes this hard to see in yourself. Trading culture rewards exactly the behaviors that constitute addiction. always be watching. Sleep when you're dead. The market never sleeps. These phrases sound like dedication. They feel like commitment. But they describe behaviors that, in any other context, would be flagged as unhealthy. If someone refreshed Instagram every 30 seconds for 10 hours straight, you'd call it doom scrolling. If someone skipped meals to watch chart candles, you'd be worried. If someone couldn't sleep without checking positions, you'd suggest seeing someone. In trading, those same behaviors get celebrated. The always plugged in trader is presented as the dedicated trader. But there's a difference between a working professional checking positions during work hours and a trader who can't stop checking positions at 3 a.m. The first is discipline. The second is compulsion. The trader who's addicted often can't tell which one they are, because the culture tells them both look the same. Let me describe the specific behaviors that signal trading addiction. The first signal: chart refreshing compulsion. You're in a position. The trade is set up. Your stop and target are in. There's nothing more for you to do. But you can't stop refreshing the chart. Every 30 seconds. Every minute, every 5 minutes. You know, logically that watching doesn't help. The trade will play out regardless. But you can't put the phone down. That's not strategy. That's compulsion. The second signal: trading on slow days because you have to. Markets are slow. There are no setups. A pro trader on a slow day does nothing. Reads, walks, sleeps. An addicted trader on a slow day forces a setup. They lower their standards just to have a trade open. They take a coin they don't normally trade. They reduce their risk-reward criteria. Anything to put a position on, because the alternative, sitting still, feels intolerable. The third signal: position checking during life events. You're at dinner with someone. Phone buzzes. You check your position. You're at a movie. You check during the credits. You're falling asleep. You check one more time. Your friends and family notice this before you do. The trade isn't the problem. The compulsion to check is. A profitable trader can step away for 8 hours and not look. Their positions are sized correctly. Stops are set. The system is running. The addicted trader can't step away for 8 minutes. There's a cultural amplifier here worth naming carefully. The lifestyle trader persona. Some of the most followed trading accounts post videos of themselves at the desk for 10, 12, 14 hours a day. Live streams of them watching charts. Posts about the daily grind. These accounts get massive engagement because the lifestyle low-key is aspirational. But what's being modeled is compulsive behavior. If you study the same trader 2 years later, most have either burned out or moved to selling courses about trading rather than trading itself. The grind isn't sustainable. The screen time isn't. The professional traders you don't see on social media are the ones who structured their lives so that screen time is bounded. 2 hours of focused work, then off the screen. But that's boring content, so it doesn't go viral. The viral content is the compulsion. And by watching it, you're being trained into the same pattern. There's a leverage angle that makes this especially destructive. Trading addiction plus leverage creates a feedback loop that ends accounts, because leverage amplifies the dopamine response. A leveraged position pays out the same emotional rush as a much bigger spot position. So addicted traders gravitate to higher leverage, not because they need it for capital efficiency, because they need it for the FEL. A 10x leveraged 5% account move produces the same emotional spike as a 50% account move would in spot. The addicted trader needs that spike, so they keep finding ways to size up, leverage being the easiest. And when leverage doesn't pay off, and it eventually doesn't, the account is gone in one bad afternoon. The pattern is so universal that high leverage perp exchanges have built entire businesses on it. They don't need any individual trader to win. They need enough addicted traders to keep clicking, even at terrible odds. The math always favors the platform when the addiction is loud enough. There's a defense mechanism most addicted traders use without realizing it. It's the screen time equals edge rationalization. The trader convinces themselves that more hours at the chart means a sharper edge. They tell themselves, if I'm not watching, I'm missing setups. They tell themselves, the best traders see things others miss because they pay closer attention. These statements feel like discipline. They're actually the rationalization layer that justifies the compulsion because the data doesn't support them. Pros who study performance metrics will tell you, return per hour of screen time peaks somewhere around 3 to 4 focused hours per day. After that, returns per hour decline sharply. After 8 hours, returns can actually turn negative, meaning more time at the chart produces worse decisions, not better ones. This is consistent with what neuroscience tells us about decision fatigue. But the addicted trader doesn't believe it. The compulsion convinces them they're an exception, that they're sharpening edge with every hour. When you can recognize this rationalization in yourself, you've taken the hardest step, because it requires admitting that the long hours weren't dedication, they were avoidance of something else that the chart was helping you not look at. That something else varies per trader: loneliness, boredom, stress from another area of life, lack of meaning. The chart was muting something. Once you see what it was muting, you can address it directly, and the compulsion fades on its own. There's a recurring after effect that traps people in this loop. The post lost compulsion to engage more. You take a loss, a meaningful one. A healthy trader steps away, reflects, comes back the next session. An addicted trader does the opposite. They open another position, then another. They tell themselves they're studying or looking for opportunities. But what they're really doing is using more trading to mute the discomfort of the recent loss. This is the exact same pattern as drinking after a bad day or scrolling after a fight. The thing that caused the discomfort becomes the thing used to mute it. In trading, this is how a single small loss becomes a week, long compulsive trading spree that wipes out the month. The losses fuel the trading. The trading deepens the losses. Each cycle of the loop deepens the addiction. So how do you train yourself out of trading addiction? I'll give you 3 practical rules. 1. Set explicit non-trading hours. Pick hours of the day when you don't trade. Period. Maybe it's between 5 p.m. and 9 a.m. Maybe it's all of Sunday. The specific hours matter less than the bright line. When the non-trading hours start, the platform closes. The chart app closes. The phone goes face down. This is the single highest leverage habit for breaking trading compulsion. Not because it makes you a better trader, because it forces your brain to remember that life exists outside the chart. 2. Track screen time, not just P&L. For 1 week, log how many hours you spend looking at charts. Most addicted traders are shocked by the number. The hours that don't produce results are wasted. The hours that produce stress are net negative. If your screen time exceeds a certain threshold per week, your edge isn't compounding faster. It's eroding faster. Pros usually spend less time at the chart than amateurs, not more. 3. Have one non-trading activity that's also high status to you. Reading, running, cooking, music, whatever you'd value if trading didn't exist. The reason this matters is addiction fills a vacuum. If trading is the only thing that gives you a sense of importance or progress, you can't quit it. If you have parallel sources of meaning, stepping back from the chart becomes possible. Not easy, but possible. There's a flip side worth knowing. Professional traders, the long-term ones, almost universally have lives outside trading. This isn't just balance for balance's sake. It's structural protection against the dopamine loop. When your nervous system gets rewards from multiple sources, work, relationships, hobbies, physical activity, trading becomes only source among many. When your nervous system gets rewards only from trading, every other input goes quiet. That's when the chart becomes the only thing that matters. The pro understands that emotional regulation is a portfolio, just like an investment portfolio. You don't put 100% of your account in one position. You don't put 100% of your nervous system in one activity. Diversification of attention is the protection against trading becoming pathological. Most addicted traders learn this only after burning out, or losing relationships, or quitting trading entirely because they couldn't moderate it. The trader who learns it before that point keeps trading for a long career. So to summarize today's episode, trading addiction is the pattern where the ACT of trading becomes the reward, not the outcome. It's driven by the same neurochemistry as gambling. Variable rewards produce maximum dopamine. Tolerance creeps in, demanding bigger positions and higher leverage to maintain the same emotional spike. It's amplified by trading culture that celebrates compulsive behavior as dedication. It shows up as chart, refreshing compulsion, forced trades on slow days, and position checking during life events. Leverage accelerates the damage. The addicted trader gravitates to higher leverage for stronger dopamine, then blows up faster. The 3 practical rules set explicit non-trading hours, track screen time alongside P&L, and develop one non-trading activity that you genuinely value. Underneath all of it is the realization that your nervous system needs more than one source of reward. The trader with a portfolio of attention sources outlasts the trader with only the chart. In the final episode of our series, we're going to talk about the deepest layer: identity and ego in trading. Why some traders cannot exit a losing trade because they cannot accept being wrong. Why being all bull on ETH can become more important than making money, and how the line between you and your positions quietly disappears. Appreciate you all for listening. If you enjoyed this episode, make sure to subscribe and share it with someone who can't stop refreshing the chart. And I'll see you guys in episode 10. Start trading now on Mosey Finance. Trade perps everywhere with one dashboard. Link in bio.